Hello, everyone. Welcome to another episode of Trade Like a Sniper, where I backtest a top-down analysis approach using ICT Concepts in order to frame a trade on a lower time frame. So today we have the Nifty, Gift Nifty 50 Index Futures. We'll be starting on the 6-month, getting data from the NCEIX in India. Okay, so here we go. Let's use the rewind tool that TradingView has. Okay, let me scrunch up the chart, shake it, shake it, shake it, shake it, and go back. 1, 2, 3. Oh, don't want to go too far. All right, let's see where we are. Okay, let's get down to business. We came down to the 6-month gap, starting to expand up. Seems like it's likely going to go here. So it's a target, possible target, right? Let's go down to the 3 months. Okay, 1 month. All right, so we're on the 1 month. Okay, so we have two confluences now. This time frame, 1 month, has an inversion gap, and we also have a fair value gap here. So two confluences, and we have this expansion, and it just seems like price wants to go here. So let's go down to the weekly. Nothing here. Daily. Nothing much here as well. Let's see if we can catch a trade. Okay, there's a daily gap here. Yellow box daily. We have created this equal highs here. Okay, in this case, I'll be in the lower time frames, kind of hourly, 4 hour, seeing if we get an expansion up. But I'm just going to stay on this time frame. Yep. So we go down, down. Great. Let's go back to the monthly. Let's go back to the weekly. This was a monthly gap, right? Okay. So now we're on the weekly. Where's the weekly likely to go? There's no gaps that I can see, but there's this whole area of consolidation. So I'm going to wait for any bearish gaps to form. Let's see if we can. Okay, so we got this nice breaker here. The weekly, if I'm not wrong, yes, and we have a gap here on the weekly, and we have a gap higher on the weekly as well. So over here. So we may come into there and then expand quite quickly. So let's go to the daily. Just have a look. Nice breaker, and then we come lower. Okay, that's gone. That trade is gone. Okay. Okay, it's a tricky one. Let's go back to the monthly. There's a monthly gap here. Let's just see how this monthly works. Oh. Okay, looks like we're moving lower into where? Maybe more into more of a discount, seems like. Okay, so I'm going to go to the weekly order block here. Very nice. Daily. It's all the way down here. It does come up. Okay, seemed to be some news event that happened because of that quick spike down, quick spike up. This was that high up weekly gap, right? Okay. Go to close. This was a daily gap. We closed below. We came back into it, and now it looks like we're going down. I'm going to put my stop here at this high. It could spike up one more time, perhaps come into this breaker area, but I can't manage the trade as how I would normally would. But what am I looking at? I'm looking at this whole area. This is liquidity to me. It's relative equal lows, trendline liquidity. It's more of just a whole swing point that lasted quite a while. So sell side here as well, relative equal lows. Down here, back into a discount. We can target pretty low, but let's say we take profits at all these lows. Unless we bounce here and we get stopped out, in that case, fine. No problemo. Okay. It looks like we'll take down this low first. Okay, so pretend we're managing the trade. We took some partials here, however many percent. Decent move, so 20, 30%, depending where my additional targets are. If my targets are, quite close by, then I would take up more. So let's say 30% here. Let's move our stop down to the swing point. Okay, we get the opportunity. We don't want it to come above that again. Okay, stops us out there, which is fine. Let's break in here. Want to see if we make more lows. It's not a breaker. It's fine. I won't risk coming back in, but let's see where we go to. Because we are at quite a premium, right? If we count from the low, if we say this area is premium, this area is discount, we're still at a premium. So let's come down to the 50. Let's see, it just came down to the 50. Big reaction. Took out the equal highs here one more time. Let's fast forward this to the weekly chart. Weekly gap here, weekly gap here, but the gap there, it's gaps everywhere. If they're conflicting PD arrays and gaps, sometimes price gets stuck in an area, so just wait. You don't have to get in immediately. I'm going to go straight to the monthly because this is too slow. Let's go. So we can see what happened. I wanted to get back in possibly. But price formed too fast. There is a breaker here, which is about here. Price comes down to here. Let's see if we can get in. Where do you want to get in? Above the swing point. Equal highs, liquidity, etc. Being a bit lazy with the analysis though. Came into this gap. Let's see if we do even come down to this area again. Okay. Let's see what happens. It took a lot more candles than I wanted. So the breaker, it might create another gap. So if it does, that's no good. Okay. See that there? This gap here on the weekly, price tags into it and then expands lower. So that's what I mean. More into this area, which could be good. May go up from here then. Okay, went deeper. Okay, looks like it wants to go lower then. So why did it come back up here? More imbalances, but let's check the higher time frames. 3 month, up, 4 month, 5 month. Okay, this was the breaker. 6 month. We can even go to 8 month. See the gap here? We're still in that gap. But do we actually have a gap where that last spike was the last 10 month? 12 month then. Okay, 12 month they didn't have anything. Is there, do I have an 11 month? Yes. Okay, it doesn't get any higher than that. So yeah, this short worked out pretty well. We didn't get stopped out. It came higher, stopped us out, and then went. So completely up to you where you want to trail your stop losses. I like to trade to break even because I don't like to lose. I don't like price to come all the way back up just to make me lose money. If I took some money off the table, I'm usually scaling it, trailing the stop loss to break even, so I come out with profit. Okay, but depending on your strategy and your risk tolerance and your mental fortitude, you may choose to do it differently, which is completely fine. There's no best way. The best way is what suits you the best. Okay, so that's it for this one. I hope you found it insightful as well. Take care. Until I see you again. Goodbye.